Hello, this is John Piper with the weekend video clip, and it's Saturday the 15th of November. Looking here at a chart of the pound dollar. We're sort of short of pound dollar, so I thought we'd start with that trade. 1, 2, the first pattern, 5 waves down to there as the first part of 3, ABC 2 wave, and now we seem to be going down in the third wave decline. I don't use targets as such, but this was over 10 cents. So a move down to 162. So we're heading for the 150 level. I mean, we're halfway there already, obviously, but I would think we're going to see about the 150 move. We entered various places, but we had an extreme stop below. I think it was there, and obviously, if you went short, then you'll be well in profit. Stop is still above 162. Let's just have a look at that, see whether there's a place to move it to. I mean, you could move it up to here, that'd be quite reasonable, above 160. But I mean, it all depends on individual style. Many traders like to take a bit of profit as a move goes down. Here a bit of a blip up now, but I think 150 remains on target there. Right, have a look at gold next. Okay, gold's blipped up again. We didn't see the fifth wave, which is 1, 2, 3, so we didn't get actual 4, 5. We got the 4 as it were, but nothing else happened. So we came down, went sideways, then went down here again. It was looking a bit dodgy, I suppose. We got a bit of a false break there below these lows, I think. Now we're blipped up. It'd be a lot better if we had seen a fifth wave. I mean, this could easily be just a simple ABC move, i.e. A, B, C. But as I said before, we are back above the lows. In fact, this green line here, or the red line, both of them maybe reflect the recent lows. So we have blipped down. Let's have a look at a longer term chart. So broken support, and we've come down again. As I said, I'm still holding long from long-term positions. I find that quite encouraging. That now becomes a fairly major support level. It's a question of looking for another opportunity to go long. I mean, you could just go long as it is at the moment. That would be a 60 pip stop, which is quite big in short-term terms. It's not very much in longer-term terms. Anyway, there's certainly, even without the 5 waves, we have now got a failed break to new lows. If this can continue, then it would look very encouraging that the low might be in on gold. As I said before, a rally on gold could be combined with a major peak in equity markets, especially with the currency dislocation we're seeing in pound dollar. So that's another important focus we're going to look at now. We'll start with Dow. We'll start with its current pattern. Yesterday's action did nothing. Day before we saw a new all-time high, ABC decline, suggesting we've still got more to come. With expiry week next week, we may well stagger into new highs. Let's have a look at the longer term pattern here. Right, expiry week's been pretty important recently. The third Friday in September came in here, right on that peak. Third Friday in October came in there, so the peak came in a few days beforehand. And the third Friday in November is going to come in, well, here, so obviously next week. So expiry has been quite critical, really. It wasn't. I think in August it was there. And in July it was there. So you can see that there are peaks in the proximity of peaks and troughs. Not so good in August with a week's gap, but that was a day or two. That was bang on. That was a couple of days. So at the moment, expiry has actually been quite critical. Whether we're going to see the same thing happen around here with I think we're certainly due a pullback. I mean, how much pullback we see, I don't know, but I think we are going to see some kind of sell-off, and expiry is the time to look at that. So we'll look at the chart action again. This is the hourly chart. We can count various. Well, I think that's probably I'll start with the fourth wave there. We've got clear 5 waves here, 1, 2, 3, 4, 5, which forms the first wave, the third wave, wave 1, wave 2, and this thing here, which seems to be sort of parabolically turning over and becoming sideways, would be the fifth wave. So certainly a case for a correction of this entire move here. That entire move was almost 2,000 points, in fact. So easily see a few hundred points down from there. I think, and I would suggest that's the time it's going to come in is around expiry. So fairly soon. Xmas rally rather depends on this move. If it proves to be a corrective move, then the scene will be set for a decent Xmas rally. If it turns out to be a passive move, then that may get blown away, and that remains to be seen. Let's look at the DAX now. Right, no change in the wave count. Clear 5 waves down here as discussed before. Clear A, B, C, B. 1, 2, 3, 4, 5. This remains the peak, so let's have a look at the action since then. Right, since the peak, we've seen this action here, which it's not totally conclusive. I mean, if we count that as a 5, well, it looks more like an ABC, but it's just, I think there was a bit of a blip there. So it could be a 5. That would then be a 2. Then got a 5 down to there, A, B, C. 5 down to there, clear third wave there. So we got 1, 2, 1, 2, 1, 2, and now we've got this thing here, which is not terribly helpful really. We need to break through there. But again, there's a possible pattern. I mean, it's not great to be honest, but we are trending down a bit. And again, we have the complete pattern into the upside. So I mean, I say there's not a huge amount to write home about there, but a break below 9150 would be a negative, and could well see us off on the DAX. FTSE. Alright, FTSE, we have this potentially impulsive decline. Count's not great. A, B, C, B. It gets a bit messy here. The 61.8% level is here. We managed to bounce off that again. But again, if we break through there, it would be a negative for the market. But at the moment, it's looking positive. Right, have a quick look at the Nikkei. Okay, went long here in 2013. We're still long, up 7,000 points, but based on the Nikkei. Quite where it's going to go, I'm not sure. We got this 1, 2, 3, 4, 5. Very subnormal correction there, considering the move we've seen. 1, 2, and now we're in the third wave form. So it may well do the same again. Obviously, the Nikkei's not a much lower base. Most people I speak to consider that Japan is the one of their favourite places to invest at the moment. That's obvious to see why, because they've got a huge amount of potential to recover. The index was around 40,000 25 years ago, so it's still only half where it was back there. Quite a big difference. Anyway, so we're still long here. I appreciate this is a very long-term trade, but that's of course where the money's made, so nothing wrong with that. Okay, that's all for this weekend. I just want to say I will be going to Costa Rica on Tuesday. I will be taking a brief holiday. Given the situation, I always update when I'm away. Just to get you don't get the regular reports. You get updates as things happen. But I will. I'm leaving on Tuesday. There'll be no report on Wednesday, and then for the next week or so, there will be occasional reports as things occur. Expiry is obviously important next week, and that's something I'll be focusing on. Anyway, have a great weekend. I hope you found it interesting and useful. I'll be back on Tuesday morning. Thanks for listening, and bye for now.